Investing in stocks is easy, and so many people make it sound and appear far more complicated than it actually is. So let's just make it super, super simple. When you think about investing in a company, and let's pick out, for example, a tech company, let's say, all you're ultimately doing when you're investing in a stock or you're investing in a company is you're buying it at one price to then have the opportunity to sell it at another price. And to win in the game, you want to buy it for less than you sell it. It's really that simple. So if we keep the maths really, really simple here, let's say you've come across a company, you think they're interesting, you think they've got potential, and it costs $10 to purchase one of their stocks, right? $10 for one stock. Now, what's then happening is that company is continuing to operate, right? They're building, they're growing, they've got a CEO and they've got teams that are pushing to help that company to grow. Now, if that company begins to grow and begins to accelerate, the market, and when I say the market, we're literally talking about financial institutions, the news outlets, are going to keep track of that organization because they're what's classified as public. So they have something that's called an initial public offering, which is basically when a company goes from being private to being public. And when it becomes public, it allows us to buy shares in it. And that means that that company is now accountable, in essence, to us as the public because we can buy shares in it. And that's why the news then reports on it, financial outlets then report on it, because it's a publicly traded company. So let's say, as mentioned, one stock costs $10, right? This company is now working, their CEO is casting out a vision, they're pushing hard, they've got a chief financial officer. Everyone is pushing for this company to grow because every single quarter, this company has to release their financials to us as the public market, as the public, to let us know how they're performing, to let us know, are they doing well, are they on track, what do they have coming up next, right? This is the accountability aspect. Now, what can then happen is each quarter as their results are released, if they're doing well, that stock price can increase from $10 to $20, for example, or it might go from $10 to $15 or $10 to $12, or it could stay the same or it could drop. Any of those things could happen, right? And so we're doing research to try and, in essence, take an informed judgment to say, actually, is this company likely to increase in value? Are they going to hold steady or are they going to decrease? Now, let's say we purchased at $10 and the company did phenomenally well across 3 months, across the quarter. They're crushing it. Sales teams bringing in new deals, new revenue, and they continue to grow and grow and grow and climb and climb and climb. Now, by virtue of that, they've gone from $10 to $20 per share. Now, if you bought in at the 10 and it's now worth 20, you've doubled your money and you haven't actually had to do anything. All you did is you were the person that was bold enough to do the research, to look into the company, see that they had potential, and by virtue of that potential, you now get to benefit from their growth, right? You now get to, in essence, celebrate in the success that that company has had because you were the one who chose to invest when they were at $10. So now you have a choice. Now they're at $20, you can either sell your position, and if you sell your position, you now have $20 instead of 10, or you can hold. You can say, actually, this company's growing. I feel that they're doing well. I think that they're going to continue to do well and they're going to continue to grow and climb. Because of that, I'm going to hold my position. Now, as you've got your original 10 invested in, they've gone to 20. As you wait now over the coming days and the coming weeks and the coming months, the business is of course going to continue to track and report and be answerable to the public and the financial markets. Now they may continue to grow. And if they continue to grow and continue to perform well, that stock price can go up even further. So it can go from $20 to 22 or 25 or to 30. If it's gone up to 30, you've now tripled your original investment. And imagine if you had invested $1,000 instead of just $10, your $1,000 would now be $3,000 if it's gone from $10 to $30 per share, right? So it all depends what you've chosen to invest. Now, the flip side of this is equally, they might go down, right? And so their performance may dip. And if their performance is dipping and you purchase in at $10 and they've gone down to $5, your money is now halved. And this is, of course, the concept of risk. Naturally, any investment carries some form of risk, and the stock market is no different. It can go up, it can go down. That's by virtue of it. And this is why your research and doing your due diligence and looking into companies and thinking about, is this a company that's likely to innovate for the future? Are they in a market that's going to be empowering the future? All of these things become super, super important. Do they have a good leadership team? Do they have a good CEO? Do they have a good structure? Do they have a great product? Do they have happy customers? You want to try and look out for all of these types of signs and signals, because the more positive evidence you have of all of these types of ingredients, that then puts you in a position where you're going to have more trust and faith that their price is going to go up, of course, instead of going down. Now, all companies can have lull periods, right? They can go up and go down, which is why I'm always a big fan of holding long positions. And when I say holding long positions, you have people who do things like day trading, right? So they might buy into a position one day. So they buy a stock for $10 literally in the morning and they sell it off by the afternoon. Say it's gone from $5 to $6 from the morning to the afternoon. They bought it at 5, they sell it at 6, and they make that bridge of profit in the difference of those numbers. And they do that each day, and then they build their capital that way. Very, very risky, can be lucrative if you're very good at it and you're glued to the charts and you know what you've been doing for a long time, but it's super, super risky. If you hold your position over an extended period of time, what it means is that if you bought in at $10, let's say you bought in at $10 and a month later it's dropped down to 5. If you continue to hold that position, maybe the following month it goes back up to 10, and then a year later it doubles to 20, and a year after that it goes to 30, and a year after that it goes to 40, right? Because the markets can go up and down. It depends what's happening. Any company goes through change, goes through positive period, lull periods, and so if you're willing to hold long, you typically are able to balance out the ebbs and the flows. And if you've invested smart and you've chosen a wise company, they'll generally increase and improve over time. Think of businesses such as Amazon. Think of businesses such as a Tesla. Think of businesses that have been able to prove themselves over an extended period and have sustainable success over time, like Meta, for example. These are companies that over the years, if you look at when they first came on the public markets to now, they've had explosive growth from their original stock price to what they're valued at now. So anyone that stayed and held their position would have made a ton of money, right? Especially if they invested a reasonable amount of money. Whereas if there were people who invested in and then they sold really quickly because they panicked because the price dropped, they would have lost out. And that's why if you're willing to stay and you're willing to hold, you'll generally win over time. Again, as long as you've chosen smart and you've looked at the foundations of the business. And that's why I always like to look at, the future trajectory of, is this a growing industry? I like things like, for example, like AI. I like defense. I like healthcare. These are spaces that are innovating for the future, or we know they're going to be around forever, right? Healthcare is going to be around forever. Defense is going to be around forever, right? AI is hot right now. It's going to be hot certainly for the next few years, and it's still early stages at the moment. So when you think about all of these things, you basically become a bit of a researcher initially. You've got to look into the public markets, look at the research, and then try and make an informed judgment. Where you have a big advantage now, though, in this current era that we didn't have before, is because of AI tools, you have a huge hack. You can literally go onto a ChatGPT or one of the AI engines and try and get their advice to help you with the research. So you might be looking into a company or interested in a company. You can run some prompts to say, hey, I'm interested in this particular company. I think they might be interesting. Tell me what your thoughts are on the future prospects of this company, or talk to me about the leadership structure of this business or the overall health. And so you're able to very quickly get breakdowns that before you'd have to be trawling through the internet or reading through newspapers or going through a whole load of hassle to try and figure these things out. Now the information's at your fingertips. And so it's really over to you to just do that little bit of research, and it doesn't take you long, 5 or 10 minutes on a weekend, just to have a little look into a company, and then start slow and then build up over time. Maybe you start off just by investing $10 in one company. It's still a start. Your 10 can turn to 20, 20 can turn to 30. And then over time, maybe you put in $100 or $1,000 or potentially even more. Once you start to build up your confidence, once you start to get to a position where you start to think, actually, I've got some real trust and belief in this company or what I'm doing, you can grow your investment over time. And this is a way that you can truly become rich, wealthy, build a ton of cash and capital in a really simple way. And I think that people really overcomplicate how simple it is to invest, and then it ends up putting so many people off making an investment decision in the first place because they're thinking to themselves, well, I don't even know where to start. I don't even know how to get involved. And so take this information and make today the day that you start to make your first few investments. Commit to the long term, so have a 5-10 year mindset towards this. Don't force yourself that it needs to be something that you get an immediate result from. And if you're willing to do that, I can assure you, you will thank the version of you that exists in 5, 10, 20 years from now because of decisions that you made today. So start to your investing journey from now. It's much more simple than you think. And I look forward to seeing the results that you have. Keep me updated by reaching out to me. I'll leave links to other social media platforms that I have in the description box below. I hope this helps you in your journey. Until then, keep climbing.